what I'm hearing, what Karen's hearing about banking is, clearly everyone knows we need CMU, we need banking union. But I don't know if they all know that we need banking mergers to make stronger champions. We keep hearing about Europe wants champions, it wants international champions for the EU. But when it actually comes to it, a lot of the policymakers we're speaking to, they're dead against it. And you're coming up against this as well, whether it's in Spain with Sabadell and whether we're seeing it with the Italians trying to buy German banks as well. What is wrong with the politicians where they don't get we need bigger, stronger banks and we need more union?
I think they're coming to understand. And
are they?
Yeah, I think so. It's clear from the diagnosis of all the reports, the Draghi, the letter reports, that we have an investment gap. The agenda is very clear in terms of what we need to invest in, the digital transition, the energy transition, and modernizing our infrastructure. And they quantified in hundreds of billions of euros of additional investment, and that investment needs to get financed through the capital markets, which is the minor part today. Only 25% of the financing in Europe, 75% comes from banks. So the banking side is hugely relevant. We need to push forward the capital market union so that the savings that Europe has, which are large, do not get channeled to other places, mostly to the US, but stay in Europe to invest in European projects. But while that comes, the banking union is essential. And as Letta says in his report, there's one whole chapter called Scale Matters. If you look at the size of banks in the world, among the top 25 largest banks by market cap, there are 0 EU banks. And there you have not only American banks, you have Chinese banks, Canadian banks, Australian banks, Singaporean banks, Indian banks.
This is the European mindset. The politicians and the regulators in Switzerland completely missed the Credit Suisse debacle. And then when they call in a white knight, UBS, Sergio Motti, he turns it round. He creates together a really big, powerful... Admittedly, it's very, very big compared to the Swiss economy. But suddenly they start worrying about it being too big, rather than saying, great, we've got a champion here as well. For me, that isn't just a Swiss mindset. That's a European politician mindset. So when you tell me they're beginning to understand, I question that.
I think they're beginning to understand all the talk in Davos has been around competitiveness, has been around the big role that the financial sector plays for Europe to be competitive.
There's no innovation without the money for it in Europe.
Exactly. You need the investment in innovation, but you need to invest also in infrastructure. We have huge infrastructure needs. You need to invest in the companies, in the SMEs. We just need to get our financial system to be more efficient in channeling the savings to productive investment, which is the big role that banks play. But really, believe me, Steve, I think they're coming to understand. And I think M&A is back on the table in Europe. I was telling you a few years ago it's boring because it takes a long time. You might remember.
Yes, I do.
Well, the point is that it might be boring, but it's essential that we gain scale. To compete in the world. Europe needs larger banks, like it needs larger companies in telecom, it needs larger companies in the tech industry and in other industries as well.
Where do you think we're going to see further consolidation in European banks?
The first step is always domestic consolidation, deals like the one that we're doing in Spain with the union with Sabadell, because there we have the beauty of diluting fixed costs in a larger cost base. We have significant cost synergies. And then the complementarity as well of having an SME business with a universal retail business and large corporates as well, which is where we excel. And then increasingly we will be seeing more cross-border. But for that, I believe that it's a bit of a chicken and egg. We need to advance into the banking union as well, because today cross-border deals have less synergies precisely because there are restrictions in how a pan-European bank can manage capital and liquidity primarily. So as long as there's ring fencing, for example, of capital and liquidity in member states, it just makes less sense to do a cross-border deal.
I want to get into the risks of doing business and being a bank internationally these days, because your model and the model of some of the other banks in Europe to have a footprint in some of the emerging markets was a model that really benefited a lot of the banks until the pandemic hit. And then it just looked like more risk attached to a bank. Here in 2025, as we talk about beefing up potentially Mexico and having a better corridor there, we've got politics at play thanks to Donald Trump, and we don't know how he's going to treat Mexico. So are there risks of having a bigger footprint in 2025?
I think the BBVA story demonstrates that our diversified footprint and the presence we have with leading franchises in emerging markets has proven to be a huge positive. We are among our peers, the 15 banks with whom we compare, the one that has the best combination of growth and return on equity. We have the highest growth, double-digit growth in credits last year, and return on equity around 20%, also increasing the tangible book value of our shareholders nearly around 18% over the last 3 years. So, and looking forward, yes, there is always uncertainty, but Mexico is a clear winner of what's going on because of the structural advantages of Mexico. Size, youth, demographics, and then the presence to the US, nearby the US with competitiveness. Right. It has, its labor costs are a fraction of the US, and that structural factor, no matter what happens with trade, immigration, drugs, etc., which are all topics that need to be resolved, Mexico will be a winner.
Let me pivot to monetary policy, because I had a terrific sit-down yesterday with Madame Lagarde, and we were talking about the direction for interest rates. So, and we know that each country across the Eurozone is very different in terms of its growth story, its inflation story. Yep. But there is a view by some of the Governing Council members that they want to get back down to a neutral setting very quickly by summer, that we may see back-to-back 25 basis point rate reductions. Would that be welcome? Or are there still concerns in your mind about services inflation?
I think that's the central scenario, and of course she knows much better than I do, but everyone is expecting for drops in the interest rate to bring it down to 2% towards the end of the year. But I would say that there's a lot of inflationary forces still out there, primarily in the US, where the animal spirits are high, and a lot of the measures from the new administration might have inflationary effects. Others not, because there are others that increase supply, which might have a counter effect. But overall, there is certain risk and concern, and here in Davos was part of the discussions, that we might see inflation coming back a bit in the US, and that might trickle to Europe, especially depending on what the Trump administration does and how Europe responds regarding the trade agreements or the trade arrangements.
Quick word on the consumer in Europe as well. The Spanish economy has been going great. 3% handled 2024, probably high twos in 2025, you think? Maybe 2.5, 2.7?
2.3.
2.3, okay. Yeah. So outgrowing Europe as well. Is that down to something that the Spanish are doing particularly well, or is it down to the next-gen funds that have gone into renewables? Is down to the FDI coming in because of that as well? Or is there something very specific about Spain that actually Northern Europe can replicate?
It's both. It's both. Clearly, the next generation EU funds have helped because they have been a big support over the last couple of years. And that will continue a bit into 2025 and 2026. So that's big support. Then what we have is very strong demographics because of immigration. So we're adding 600,000 people per year, year after year. It's not an issue in Spain. They all find jobs. A lot of that immigration comes from South America, same religion, same culture, easy to integrate, and that has been a boon for the economy because we're bringing in talent and we can grow because it's more people. So the labor market has been very strong, and maybe that's a lesson for Europe in these periods when there's a lot of anti-immigration talk. For Spain, this has been a very, very positive development. Yeah. Also, in Spain, we have an advantage in the energy side because of the sunshine is very reliable in Spain. So there's a lot of investment coming in to take advantage of that. And I think that will be a trend going forward. So Spain is well set to continue to grow well beyond the Eurozone, precisely because of the labor dynamics as well as the energy. And then the final point I would make is on the export side. So tourism has been really strong. That's another positive of our economy. And exports, primarily in the services sector, has been very strong. Where we're lagging is in investments, so to gross capital accumulation, which is essential for productivity. So really our productivity needs to improve so that we can not only grow the economy, but also grow the GDP per capita.
Brilliant. It's so nice to have a positive story. It really is, because there's a lot of doom and gloom in Europe. So great to see Spain firing on all cylinders. Carlos, lovely to see you.
But if I may say,
yes, you may.
In Davos, and I was telling Karen earlier, the pessimism that some people talk about in Europe, I see it with a different light. I think there is now a clear consensus around the need to get Europe to be more competitive.
That's great.
And to simplify.
I hear you, but let's move from talking about it to doing it.
But that's exactly what we're talking about. Action now. We need action. And people like Commissioner Dombrovskis has a clear mandate to simplify. And I come out of Davos with a clear conviction that he's going to deliver.
Brilliant. Love it. And of course, Mrs. Rivera as well. She's got a
Oh yes, of course.
a key brief. So that would be fascinating how we change
her
the
mandate is very clear, and she's always talking
huge
about
mandate, I know that. Carlos, nice to see you. Carlos Torres Vila, who's the chair of BBVA. Thank you, sir. Very nice to see you.
Thank you.